For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. Shares of Palantir Technologies experienced a sharp downturn on Thursday, extending the losses from the previous session when the stock tumbled by 10%. The decline came in response to reports that the Trump administration has directed the Department of Defense to implement substantial reductions in the United States military budget. This development has raised concerns among investors about the potential impact on companies that derive a significant portion of their revenue from government contracts, including Palantir. The possibility of major budget cuts within the Defense Department could pose serious challenges for military contractors, particularly those with extensive ties to government agencies. Palantir, for instance, generated over 40% of its revenue during Q4 from contracts with the United States government. The company has also recently secured an extension for its agreement with the United States Army, highlighting its deep-rooted involvement in providing technological solutions for defense operations. Given the potential shift in government spending, investors are now evaluating how such budgetary adjustments might affect Palantir's financial performance moving forward. Despite the two-day sell-off, Palantir's stock remains significantly elevated compared to its price at the start of the year, still holding onto nearly 40% gains. Moreover, over the past 12 months, the stock has experienced a dramatic surge of 350%. This remarkable growth has been fueled by heightened investor optimism, particularly regarding the company's advancements in artificial intelligence-driven analytics. This expectation has contributed to the stock's strong performance despite recent volatility. Given the current market conditions and the latest developments affecting Palantir, it is essential to analyze the technical indicators that could provide insights into future price movements. By examining key chart patterns and critical price levels, investors can gain a better understanding of where the stock might find support and where potential resistance levels could emerge. Palantir stock had been in a steady uptrend for most of February, following a strong earnings report that acted as a catalyst for a breakout. Earlier in the month, the stock surged above an ascending triangle pattern, signaling a bullish continuation and generating significant buying interest. However, the positive momentum that drove the stock higher began to fade during Wednesday's trading session. On that day, the stock climbed to a fresh all-time high before reversing sharply and closing below the previous session's low. This price action resulted in the formation of a bearish engulfing pattern, a well-known technical indicator that often signals a potential trend reversal. When a bearish engulfing pattern emerges after a prolonged uptrend, it suggests that selling pressure is increasing, which could lead to further downside movement in the near term. Adding to the concerning technical signals, the relative strength index, an important momentum indicator, showed signs of weakening buying pressure. While the stock reached a higher high on Wednesday, the relative strength index failed to match this upward movement, creating what is known as a bearish divergence. This type of divergence occurs when price action continues to make new highs, but momentum indicators show diminishing strength, often preceding a period of consolidation or decline. Given these technical developments, investors should closely monitor key support levels where the stock might stabilize before determining its next directional move. Let's break down the crucial price levels that could play a role in shaping Palantir's near-term trajectory. On Thursday, Palantir's stock declined by 5.2%, closing at $106 after reaching an intraday low of $95.80. This sharp pullback has placed the stock near critical support zones that could determine whether the recent sell-off continues or if buyers step in to stabilize prices. The first key level to watch is the psychologically significant $100 mark. This round number level often acts as a psychological barrier where buyers may look to defend the price against further declines. Additionally, this price point coincides with the session low recorded on the day the stock experienced its breakout, making it a potential area of interest for technical traders. If the stock fails to hold above the $100 support level, the next critical area to monitor is around $85. This region aligns closely with the 50-day moving average, a widely followed technical indicator used to assess the medium-term trend. Furthermore, this price level also corresponds to the upper boundary of the previously established ascending triangle pattern. Historically, resistance levels that have been broken to the upside can transform into strong support zones, which means that this area could attract buying interest if the stock continues to pull back. In the event of a deeper correction, the stock may drop to $66, which represents another major support level. This price point is significant because it aligns with a horizontal support zone that connects the peak from mid-November with the swing low recorded last month. If the stock reaches this level, it may present a more attractive entry point for long-term investors looking to capitalize on potential future gains. While recent weakness has led to a short-term pullback, investors should also consider the possibility of a resumed uptrend in the future. By analyzing historical price action, traders can estimate potential upside targets if Palantir's stock regains its bullish momentum. One effective way to project future price movement is by using the bars pattern tool, a technique that involves overlaying previous price trends onto current price action to predict possible outcomes. A useful reference point is the stock's performance from early November to late December, when it experienced a strong uptrend following another earnings-related breakout. By taking the price bars from this period and applying them from the $100 support level, the projection suggests a potential target near $170. This projected price target aligns with the stock's historical tendency to experience strong upward moves following consolidation phases. If the stock stabilizes at key support levels and buying momentum returns, a rally toward $170 could be within reach over the coming months. However, investors should remain mindful of broader market conditions and any new developments related to government contracts that could impact Palantir's growth trajectory. Palantir's recent sell-off has sparked concerns among investors, particularly due to reports of potential budget cuts within the Department of Defense. As a company that generates a substantial portion of its revenue from government contracts, any shifts in federal spending priorities could have meaningful implications for Palantir's financial outlook. Despite these near-term uncertainties, the stock remains significantly higher compared to its levels from a year ago, reflecting strong investor confidence in its artificial intelligence-driven software solutions. From a technical perspective, recent price action suggests a shift in momentum, with key indicators pointing to weakening buying pressure. Investors should closely monitor crucial support levels, including $100, $85, and $66, to gauge potential entry points. Additionally, historical price analysis indicates that if the stock resumes its uptrend, a potential upside target of $170 could come into play. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.